Welcome to the Texas REIAs. This is sponsored by flipping.com, the #1 place on the internet to get started flipping, and the Texas REIAs, which is the largest by far network of real estate investor associations in the great state of Texas, with over 150,000 members, participants, and attendees. And we do a lot of things for real estate investors, including training. So we're going to do some market updates right now. And we're going to talk about what's going on in the marketplace. So the biggest change in real estate over the last few years is interest rates went up. And when interest rates went up, and hey guys, if you're talking in the back of the room, if you could take it out in the hall if you want to talk, because we're trying to do a presentation in this room, turn in your form outside and or come back when you're ready. But the biggest change in real estate over the last couple of years was obviously interest rates. Interest rates went up. Now, a lot of people think interest rates are high. I would describe interest rates as normal. Okay, I started buying rental properties in 2003. I have a portfolio of $30 million worth of houses. Most of my mortgages are 6.5% or 7%, because that's normal, and that's what they were back then. I just let them roll, right? And the tenants have paid off a lot of them. But interest rates at 3% is not normal. Okay, that it got down to 3% for a while. Before a few years ago, prior to that, when did interest rates get down to 3%? Anybody know? Before 3 years ago, when did interest rates get down to, prior to that, when did interest rates get down to 3%? Anybody know? The answer is never. Never in your lifetime, your parents' lifetime, your grandparents' or great-great-great-parents' lifetime. It never happened before. When's it going to happen again? My guess, never. I don't know. We don't know. We don't know. But the things that would have to happen to make that happen again, you're going to be more worried about the zombie apocalypse than you're going to be worried about interest rates. I mean, I doubt it's ever going to happen. I don't know. Who knows? We don't know. We don't know. But it's normal now. And personally, I'll tell you, I like normal. I like normal. I don't like abnormal. I do residential. I do commercial. The problem with commercial, when you invest in commercial, right, most commercial syndications are 5-year deals. So you're investing in something that's probably going to get sold or refinanced in 5 years, right? So you're betting on what the marketplace is going to look like in 5 years. Now, a few years ago, the market was hot, red hot, okay? And in the red hot marketplace, people were buying multifamily. We do all kinds of commercial, including multifamily. So people were buying apartment buildings at top dollar because it was super competitive. So they're paying top dollar, and they were getting them financed with 3% mortgages. And even at top dollar with a 3% mortgage, you could collect enough rent to pay the mortgage. But now interest rates are no longer 3%. They're normal now. Now 6.5, 7, whatever. So now when people are selling these multifamily properties, if you tried to buy the properties even the same price the guy bought it for 5 years ago, right, at a 7% mortgage, 6.5% mortgage, you can't collect enough rent, right, to pay the mortgage. So there's big problems, right? Some of these properties have big problems, and they're doing cash calls and all kinds of things to refinance these properties. So I don't like it. You know, if 5 years ago when people were offering me these commercial deals, I was like, what are you going to do when interest rates go up? And people are like, well, interest rates are low. I was like, now they're low. What about when they're 15%? And I had some people that said, well, how could interest rates get to 15%? Does anybody know what interest rates were in 1981? 18%. Yes, interest rates could get to 15%. Okay, they could. They have, even more than that. Right? So Wayne Gretzky, his famous quote, I don't skate to where the puck is, I skate to where the puck is going. Right? Today, I love commercial because today everything's normal. The market's normal, it's not hyper competitive, you can get pretty good deals, and you can finance them with normal mortgages. And the bet you have to ask yourself is in 5 years, you know, are mortgages likely to be normal? I'd say probably so. Could be more, could be less, but it's a much better bet than in 5 years are interest rates going to go back to where they've never been before in the history of the world. That was not a good bet. So what happened in the real estate market? Let's talk about it. In Texas, we're talking about residential first. Houses, average house price in Texas, $421,000, up 4.8% year over year. Just at the end of the year, it went up. Median price in Texas up 2.5% year over year, $333,000. Now, if you only look at one number, if you want one number to look at to like say, what about the health of the real estate market, what number would you look at? I would say look at this number right here, months of inventory. That's more than any other number that'll tell you what's going on in the marketplace. What is months of inventory? What is inventory? Inventory should be thought of like this. If you took all the houses that are for sale in the MLS and you stopped adding any more, right? Don't add any more houses for sale. Let's just take the houses we have for sale and let's sell them until we're out. At the rate of purchasing, adoption, with the consumption, how long would they last? And the answer is 4.6 months. We have 4.6 months of inventory. That's how much inventory we have. Now, let's put that in perspective. They say if there's less than 6 months of inventory, great. You have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. Well, we're still in a seller's market. We never left the seller's market. Now, it's not as strong as seller's market. A year ago, we had 3.7 months of inventory. That was a pretty strong seller's market. So now we went from a strong seller's market to a lukewarm seller's market, but it's still a seller's market by any measure. So what's the history? 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10% in 1 year. 2023, flat. 2023, flat. And then 2024, they just came up a little bit at the end of the year, okay? About 2.5%, median 5% average. So it went way up, it went up some more, and then it flattened out. And it bounced along flat for a long time, and then it just started to come back. So, and the story is interest rates. Now let's do another quick quiz to the audience. Interest rates. When interest rates go up, what happens to home prices? Do they go up or do they go down? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Okay, we're not getting a lot of voter participation here. There's only two options. It's just your opinion. Opinions can't be wrong. Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Interesting. They do both. There's different effects. I'll tell you something about home prices. They don't really care about interest rates. Home prices care about two things, supply and demand. That's all it cares about, pure market, supply and demand. Now, certainly when interest rates go up, mortgages are more expensive, fewer people can afford them, demand goes down, for sure. But some other things happen as well. What else happens? Well, something really interesting. Right now, if you look at the housing market, normally 2/3 of houses that are for sale are resale, 1/3 are new construction. Right now it's inverted. Why is it inconverted? Why doesn't anybody want to sell their house? Because they got a 3% mortgage and they don't want to give it up. So as a consequence, all of this inventory is held off the market. So yes, there are fewer buyers, but there are also equally fewer sellers. So when you have fewer buyers and you have fewer sellers, what happens to home prices? Flat. So for all of 23, didn't go up, didn't go down, just flattened out, right? And 24 is mostly flat, and to the end of 24, it started to come back a little bit. And why did it start to come back a little bit? Because interest rates are finally dropping a little bit, right? Houston, average price up 4%, 419. Median price up 1.5%, 4.4 months of inventory. 2021 up 16%, 2022 up 10%, 2023 just like Texas flat. Lease prices up a little bit. When lease prices are up, what does that mean? Does that mean apartment buildings are full or apartment buildings are empty? They're full. Yeah, they're full. Why are they full? Supply and demand, right? People keep moving to Texas, right? Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious, right? And there's another 10 million people we don't know where they went, but we know a bunch of them are here too. And they all need a place to live. And they can't afford a house or qualify for a mortgage or whatever. They got to live in an apartment. So yeah, the apartments are full. Dallas, Big D. Average price house in Dallas, 513.7, up 5%. Median price, 397, 400,000, right? Up 1%. Months of inventory, 3.7. Dallas is the hottest market in Texas. Congratulations. 2021, prices went up 20% 1 year. 2022, prices went up 15% 1 year. 2023, up 1%. Okay, and then 2024, that's what they did. Leases are up a little bit. So Dallas is doing pretty well. Now, Austin is a little bit of an outlier. And the outlier of Austin was 2021. In 2021 in Austin, Texas, prices went up 29% in 1 year. Crazy. In 1 year. I was there. Right? Prices went up 29% in 1 year. In Austin, Texas, in 2021, there was 0.4 months of inventory. Less than 2 weeks of total inventory. So we put a house on the market, they get 11 offers in a weekend. 1 would win, 10 would lose. The 10 people that lost would put another offer on another house, they got 11 offers on a weekend. 1 would win, 10 would lose. And this would happen over and over again. Until people would start screaming at their realtors, what do you have to do to not get outbid and buy a house? I need to buy a house. And in 2021 in Austin, Texas, it became normal in that abnormal year. It became normal for people to buy houses 5 to 10% over appraised value. Do you know the bank will not allow you to buy a house above the appraised value? The total down payment and the total loan cannot exceed by $1 the appraised value. So people were actually buying houses 5 or 10% above appraised value, putting a down payment, getting a loan, and then they had to pile a big sack of money on top of that after, right? And that became normal in that abnormal year. 2022, they went up another 10%. 2023, down 8. So most of Texas went up 30 and flattened out. Austin went up 40, came down 10 and flattened out. Same thing if you're investing for 3 years. If you invested for 1 year, you might have lost money. San Antonio. Oh, Austin's actually the most expensive city also in Texas. $555 average price, $430 median price. And then finally, but it did go up at the end of the year. And then finally, San Antonio, the most affordable major city, average price $357, up 1%, median price $300, up 2%, 4.9 months of inventory. I'll say one other thing about Dallas. I don't know why. Dallas has always been the bellwether of Texas. If you ever want to know what's going to happen, Dallas is the first mover. First one to go down, first one to go up. I don't know why. The 4 major cities, Dallas is the first mover, and it's the healthiest and hottest market, so that may be a good data point. What's happening? Well, the economy's pretty good. Not great, pretty good. Real estate doesn't care that much about the economy, but you know, if the economy is doing well, people feel better, right? A little more likely to buy a house. Affordability is not good. Interest rates went high. House price trajectory is flat for the most part. Housing supply, we got another problem. We have a housing shortage. Who's heard of this? We're in a housing shortage. Yeah, we have 6 million fewer houses than we need for the people that need a place to live. And when there's not enough supply, what happens to prices? That's pushing prices up. So we have low inventory. We're still in a seller's market. We're not building enough houses. So the housing shortage is going to continue. So anything that might cause prices to go down are being offset by all these things causing prices to go up. Housing demand, sales trajectory flat, pending sales trajectory flat. Migration, though, is a big one. That's a big one. This should be like a triple-size bullet. The migration is the ratio of people moving in versus moving out, supply versus demand. And Texas has huge in-migration. The population is exploding. And because of that, everybody needs a place to live, either a house or apartment. We're not building enough houses. We don't have enough apartments. You know, it's not keeping up with the influx in population. And that's the thing. So the only thing really holding us even from kind of going up even more is interest rates, which are starting to fall a little bit. So our projection for the marketplace is not a lot. We think the market will creep forward. We don't see anything big on the horizon that would make it crash. We don't see anything big on the horizon that would make it explode. We expect moderate growth this year. And by the way, the Texas REIAs, this is not my data. This data comes from the Texas A&M School of Real Estate and a number of online sources. We're not here to try to convince you of something. The National Board of Realtors, every year, the market's going up, the market's going up. When we see data showing the market's going down, we'll tell you the market's going down. When we see market going up, we say the market's going up. When we say the market's going flat, the market's going flat. Okay, and that's our projection. We're not here to try to convince you of everything, because we have strategies to make money in up markets, down markets, and sideways markets, and you do need to be a student of the market.